Hello, this is the tradesight U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning Monday, April 20th, 2015, and ending Friday the 24th. A couple of notes. We just finished up options expiration for the month of April. The whole week was largely uneventful until the big gap down and push lower on Friday on some news. We got through about half of core earnings in terms of days, although there are more earnings releases coming out this next week than there were in the last week. So the biggest days of earnings are still ahead of us. That does make the market a little bit different than most of the rest of the quarter. So we'll be on guard for news releases and stuff like that and trading it accordingly. Volume was poor this week. We'll show that in a minute. And that kind of kept us trading mostly in the first 2 hours play every day. But I will say that a lot of times markets have turning points right after tax day. Either way, either people are selling stock and then once they get past tax day, they stop selling, or sometimes they've raised some money, put some money into their IRAs for the prior year right up until tax day, and the market kind of runs up and then that ends. So a lot of times the market starts moving right after tax day, and tax day was on Wednesday. We had 2 days of trading since then, and so far it's been down, sharply down on Friday. We're still trapped, though, in this general area, as you can see, that we've been in since really December. I mean, this is literally, we basically closed almost exactly to the tick at where we ended 2014 in December, and we've been in basically on the S&P only about a 140-point range basically for the whole year so far, and most of it inside of that. So that's not a huge range. I mean, when you go back and look at a couple months last year, October to December alone was more like 300 points. So it's definitely been contained and unexciting. But there's no new signals here. We did have a new 9-bar startup phase. You can see completed the green numbers on Thursday, and then we rolled on Friday from that. Meanwhile, the S&P down 23 on Friday. That's the cash index there. The NASDAQ 100 down 67. A lot of these were gaps, and I'll show you what that looks like on the intraday. So it wasn't all tradable, even though we had some nice stuff anyways. Stocks down only 10. Biotech's down 53. Google lost 10 and Apple lost 1.5. The VIX was up, obviously, 1.29, but be aware that that's still a fairly relatively tame number for the VIX. So in other words, in terms of downside movement, the VIX is still low. We could still go significantly lower. Oil, after breaking out the other day, came back a bit to 56.05 for the close. Gold was up 7. The trend, the 10-day trend, had gotten down pretty low. It's back a bit here, but remember, you get down near 0.85. That's usually a selling point in the market. And then let's talk about volume. So NASDAQ volume closed at 1.8 billion shares here on Friday, and the disappointing thing about that is that that's options expiration. So that's when a lot of volume trades as they're rolling the options into stocks and closing out the positions, and we only get 1.8 billion on that is pretty low. You can see a lot of the individual spike days on volume looking back over the year, the little dots that stand out. Those are often expiration. Now, triple expiration is heavier. That's what we saw in March and December. But even if you go back into February and stuff, it's usually better than this. So this is a really, really boring options expiration. And that explains the other problem we had this week, which has how light volume was leading up to expiration. The prior Friday, we had hit a one-day low on volume for the year at 1.4 billion shares, and then it was 1.45 on Monday, barely over that on Tuesday. We did get up to 1.65 on Wednesday, then back to 1.55 on Thursday before this options expiration. But those are all horrible volume numbers. Another way to do it is to put it into a weekly perspective and just understand that this is not a very high. I mean, look at some of these bars close very high compared to where we closed this last week. It's a very overall very weak volume series right now, and that has impacted our trading. I mean, not as much stuff going on, especially after the first hour and a half or so, 2 hours of the day. So we're focused on that period. We come back after lunch and look around, but if there's no volume coming back in, then you don't want to push anything. You don't become a successful trader by forcing trades. All right, let's take a look at what the markets actually did for the week. Here's 10-minute bars on the ES, so you can see the whole week. Last Friday's close, we had a flat opening and then a little push up Monday and then rolled over a little bit. Tuesday, again, pushed up early but then sold off, came back, closed flat. Wednesday gapped up and dead flat. Wednesday was pretty boring. Remember, at that point, we were focused on the fact that unless we got an options unraveling move and maybe some earnings stuff, you just kind of usually wind out the week where you close Wednesday because of expiration. And Thursday basically went nowhere, literally gap down, closed even. That's exactly what you would expect. But Friday, between some of the earnings numbers and the CPI and some global data, we had a big gap down that we did not even attempt to come back. You can see how the VWAP, the purple line, contains the futures all the way down, and market direction was red the entire day. So nothing positive on that chart for the markets at this point, but overall it was an okay week for us. Certainly kept it very focused, I would say, in our trading and our trade calls to make sure that we didn't get anybody in trouble based on what we were seeing. Here's a look at the NASDAQ side, fairly similar. Thursday was just so flat on the NASDAQ. One of the flattest days I can recall. If you look at that, you're talking about a 15-point range on the NQs for the whole session, and then Friday the gap down. We did close on the VWAP on Friday. Matter of fact, we closed on the VWAP almost every day of the week. All right, so what else can we look at going forward? We'll take a look at the data this week. Here in the U.S., there's not much, so let's talk about it. Monday and Tuesday, nothing. Wednesday, the MBA mortgage index, the housing price index, existing home sales, crude oil inventories, which is a weekly number. None of that's a big deal. Thursday, initial and continuing jobless claims, new home sales, and natty gas, the weekly number. None of that's a big deal. Durable goods on Friday. We don't have any of the major other things to worry about, like a Fed meeting or first look at gross domestic product for Q1. That'll be the following week. But we do have the last 4 days of the core 8 days of earnings, so it is still a different environment. You still get a lot of those rumors late in the day that swing the stocks that are reporting after the bell, and of course the gaps in the morning are based on those earnings. So it's a little bit different environment, a little higher risk to hold things. Not that we do a lot of that anyways, but holding things overnight. So we'll just be trading it straight up this week. There's nothing really to focus on except for those earnings, and see how the market really starts to focus on that. What the final thought is. Obviously, if the idea here is that they've seen some of the earnings and they're not over impressed with the guidance going forward, then this could turn into a little bit bigger sell-off. We'll be targeting those red lines on the futures, both the ES and the NQ, as a downward first target. But if we crack those, again, it's a time of year where things start heading in one direction usually. So I do think that we could get a decent move here finally in the markets with tax day behind us. It might take a couple more days through the earnings. And of course, the big key is volume. We've got to see volume come back. Big moves without volume are not exciting. And I think if the market starts to pick up some speed, especially to the downside, you'll see the volume come back and we'll have a lot more interesting time. Charts brought to you by eSignal as usual. They have the new eSignal 12 out. We'll be showing you some of the new features of that in the coming weeks. Everybody have a great trading week. We will be here in the lab as usual to help you make money. If you do like these videos, please like us on YouTube. It does help us out. And you can take a 2-week trial of our services if you're interested in seeing our trade calls. Have a good week.